Hello. Today we will be talking to C. Vijayakumar or CVK, the CEO and Managing Director of HCL Technologies. The company reported results for the second quarter on October 14th. Its new deal wins in the quarter had a contract value of $2.245 billion. Its products and platforms business, however, fell sequentially and on an annual basis. Let's hear what CVK has to say. First thing that I wanted to ask CVK was that your products and platform business. I know there were a lot of questions around this during the call as well. Yeah. But I wanted to understand the sort of larger picture that you see around products and platforms, and where do you see the business headed? We've been hearing commentary around the business for at least the last 2 sort of picture that you see for the business.
Yeah. So Neha, the products and platform business is 12% of our overall portfolio. 88% of our portfolio is services, which has grown phenomenally well, 5.2% constant currency growth, and pretty impressive year-on-year growth numbers as well. On the product business, it's a seasonally a weak quarter for the product business, and some deals which were to happen in this last quarter slipped into the December quarter. Except for that, we continue to remain very positive of the products that we've invested. A lot of them have been modernized. We have launched Commerce, Unica, and many other products on various hyperscaler platforms through what we call as HCL Now proposition. So all the investments that we are making is resonating well with the customers, the new product features and functionality. And the demand for products like Commerce is, it's one of the most robust e-commerce products in the industry. In fact, one of the largest retailers in North America tripled their capacity on our Commerce product in the last quarter. So overall outlook is pretty positive given the nature of products that we have. And so, I mean, there's nothing more to add. I think this year we said we will be a flat to 1% growth. And given the overall progress that we made on the product business, we remain confident of a good trajectory going forward.
Right, understood. But by when do you see, these issues sort of kind of smoothing out? Is there a timeline that you have in mind? And also, it's been a while since the IBM product acquisition. Do you have something similar in the pipeline? Are you looking at any other big bang acquisitions?
No, we are not looking at any big bang acquisitions. Today, there is so much momentum on the organic business. So I think we are better off as a strategy to focus and execute to the demand that the market is presenting to us, rather than looking at any major acquisitions. We can always have small tuck-ins to expand in a geography or in a capability area. So you'll only see the smaller ones. You won't see any big bang acquisitions.
Understood. Fair enough. Also, your peers, a lot of them seem to have raised their guidance, not just Indian service providers, but also people who are those who are based outside of the country. But your guidance for this year, anyway, I know you fielded a lot of questions around this about just providing a double-digit growth and not giving an absolute number, etc. But your guidance is also constant. You've not changed your guidance.
Yeah, actually, it's a little bit of a conceptual question. I mean, in fact, if you see the last 5 years, we gave precise guidance. We met guidance every one of the 5 years, both on revenue and margins. I think moving forward, we think trying to kind of provide a broad range is the right approach, rather than kind of putting a very precise number and then really chasing that every quarter. I think it's not the best use of the management time. Providing a broad picture, and I mean, we've always delivered to our guidance. And we're going to give you leading indicators like the total booking numbers, the net hiring number of people that we're adding. All of this should give you some kind of leading indicators from an overall growth perspective. So we are really not keen to give a very precise guidance.
Understood. Also, CVK, I wanted to understand how is the, attrition has been an issue, I think, across the board. And what we are hearing from analysts and the larger community is that this is a problem that's here to stay. A lot of people talk about how this is a problem across the industry and across industries and not just, with IT players, etc. But do you think you're on track to, I mean, are any of these problems affecting your supply side, given the demand that you're seeing right now?
Yes, attrition has picked up in the last quarter,
Right.
but it's still fairly below many other industry players. So we are quite happy about that. You should probably you would have read that HCL was rated as the #1 professional services firm globally in Forbes Best Employer list. So it's
Right.
an amazing recognition. Not only the India heritage providers, but number of global players. HCL came on top on this Best Employer list. So our employee value proposition is very strong. We are really not looking at our engagement with our talent on a short-term basis. We are looking at a much more long-term career, really enabling them to scale up to deliver more and more high-value work. And I think that is resonating well. And also, we took tremendous care of our employees during the most difficult phases of COVID. I think all of that is really kind of making it very rewarding for people to continue with HCL to pursue long-term careers.
Right. And how is the demand environment changing because of the pandemic? Is there a difference in the way deals are structured? Do you have to make new negotiations? Is there anything, as the nature of outsourcing, has that
I think it's not completely new, but now what happens is one is the whole vendor consolidation theme. There are a few vendors, customers who are high quality vendors. They want to consolidate around them. Some of the wins that we had last quarter was related to that. The second piece is really do the infrastructure and application operations as well as modernization of infrastructure and application and really migrate them to cloud. So these are the two major themes. And sometimes both the outsourcing and the modernization gets combined into an overall deal. And that's what we've seen in several of the large wins that we've had in the past 6 months.
Right, understood. And also, you've expanded into a bunch of new geographies. I remember you've mentioned this in the last few quarters whenever we've spoken. So this is kind of, bringing it all to fruition. But what is the larger strategy in these geographic markets? Because Korea, Mexico, there's a bunch of whole new kind of markets.
No, I think there are two. I mean, one is, of course, there is a core market, which is US, UK, Nordics, and a few more English-speaking countries. That's the core market for us, where we have strong market presence, good market share. So we will want to sustain and consolidate and grow in those markets. There are what we call as 5 focus countries: Germany, France, Australia, Canada, and Japan, where the market size is very big and our presence is lower than what the market opportunity is. So we are stepping up our presence by more local leadership, investing in local solutions and talent to really work with our clients, both from delivery and solution perspective. And then there are some geographies where we are just not present, like South Korea, Brazil, and some of these geographies where we are investing. And Mexico, we were present, but we are stepping up. In fact, one of the deals that we won is from a large manufacturer in Mexico, which is among the top 5 deals that we won in the last quarter.
Right, right. And our margins and, is there enough sort of leeway or enough sort of opportunity in these geographies that you're entering?
Yeah, you have to be selective. You can't go after all the business. You have to be selective, and the value proposition needs to be strong to deliver a reasonable margin. And but early days in these geographies, so maybe we will invest for some time, and as the scale increases, margins will automatically play out.
Right. 2 quick questions. One is how are you seeing deal ramp ups? You mentioned some got postponed into the current quarter.
No, that's only
But
in the PNP segment. It's not really a ramp up. In software business, there is software subscription and the new license. And new license, when it is sold, a big part of it gets recognized in the same quarter. So that's got flipped into the next quarter from a closure of the sale perspective.
Right, understood. But given the softness in products and platforms, do you think your guidance is realistic and you'll be able to meet the forecast that you've made for this year?
Yes, we are quite confident, even though there may be slightly lower revenue from the product business. I think the services business will make up for it, and we are confident of the double-digit growth.
And now with travel opening up, CVK, are you going to look at, are you going to sort of relook your H1B strategy, your onshore, offshore strategy, some of the things that, of course, everyone had to kind of stay back at home and travel had kind of taken a backseat. Now with things opening up slowly, are you also looking at opening up travel within the company to service clients, etc.?
Yes, we are already traveling to meet our clients. I've traveled to India, I've traveled to Europe, I travel within the US. So across the board, clients are also a lot more open to meet in person. So travel is opening up. And we are also put together a return to office strategy where all the E4 plus employees are already coming to office 2 days a week. And we will gradually expand it in the next few weeks and really transition to a hybrid operating model.
Right. And H1Bs?
Yes, we will. I mean, of course, it is not a major, we have never been a big consumer of H1B. We've always hired locally for the longest time. So to whatever extent we were using earlier, that will continue.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.